Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be focusing on another piece of news for Tesla stock that was recently released, and this involves the changing of a bull case price target for Tesla by Morgan Stanley. So before we go ahead and jump into that news, we'll go ahead and take a look at Tesla stock for today. As you can see, we are currently at almost exactly $1,500, about at $1,501 right now per share, with a plus 1.53% gain for today, which is around $23 in gains for the share price. And then in after hours, we are currently at plus 0.13% or plus $1.88. So as you can see, we are lingering around that $1,500 marker. And I mentioned yesterday that I think if it does drop below $1,500, I think there's a lot of people right now that will be willing to scoop anything up under $1,500 and put it into their portfolio, because in my opinion, I feel like that's a pretty decent sell price considering the fact that I do think the stock price will linger around this $1,500 number for a while. I think that this $1,500 number will be kind of similar to the position we were at with like the $840 number, the $900 number, $950 number. Just within those price ranges, we had Tesla linger around just a little bit for a while. As you can see at this like $850 marker, $900 marker, and then we had that rebound once again at this $850 marker, $900 marker. So I think that is a little bit comparable to where Tesla may be at for a while, at least until we see another significant surge in the stock price. So as you can see here, from like the time range of February 4th, 2020 to like February 26th, we had this similar price range. And then also we had this rebound once again from like June 2nd to like June 29th of it being in that similar price range. So once again, we've bumped up the stock price per share for around $1,500, and it's been pretty volatile around that price range. So I do think this will be kind of similar to what we've seen previously at like the $800 to $950 price range. So with all of that being said, let's go ahead and check out the price target recently released by Morgan Stanley. And as always, if you do enjoy the Tesla content and Tesla news, then please make sure to drop a like on the video. It really does help me out, and especially if you're early, it only takes a few seconds, so I really appreciate that. So let's go ahead and jump over to this price target and check this out. So as you can see, an article by Market Watch from Claudia Assis, and this is titled Tesla Stock's Bull Case Raised to $2,500 at Morgan Stanley. This article starts out by stating Adam Jones at Morgan Stanley on Wednesday upped his price target on Tesla Incorporated shares, as well as a bull case scenario price, saying that for the first time in his 10 years tracking the Silicon Valley company, he's modeling it to become a very, very large automaker. He increased the price target to $1,050 per share from $740 per share, representing a 30% downside to Wednesday's price, and the bull case to $2,500 per share from $2,000 per share. It then says he kept his rating on the stock at the equivalent of sell. The bull case is plausible with concerns around a possible over-dependency on China, underestimating legacy automakers, and overestimating timing for autonomous vehicles, among others, he said. So before we even go any further in this article, I do believe that these concerns are a little bit valid. Yes, I think there is the possibility of an over-dependency on China, as we've seen with how efficient production can be in China, and especially just when it comes to the time required for building factories. China has proven to be the most efficient and most optimized option. So with all of the Rona situation going on, whether there's going to be another lockdown in the future or not, what we know, not only just given the stock market numbers, but the Rona numbers as well, is that China is in a great position for a good economy right now, whereas the United States is suffering arguably the most in terms of the effects on the economy. And yes, the stock market is quite different from the economy itself. As many of us have learned throughout the past few months, we understand this. So yes, in terms of just like a bearish point, there is the possibility of overdependency on China, but I think that possibility exists with many other companies in addition to just Tesla and stocks in the stock market. So I believe that China is a big major company that is obviously going to take up some market share in the future. They're likely going to be a country where many companies companies go to because of that efficiency that they have, and especially when it comes to construction of factories in China. So they're very efficient at that, but I think that's just a general problem with many companies in the future, and it might not even be an issue, but it's just a potential risk that does exist. So my counter to that would be that is obviously a risk for many companies in addition to just Tesla. So that's something kind of just across the board already. And then it also mentions a bearish factor of potentially underestimating legacy automakers and overestimating timing for autonomous vehicles, among others. So yes, I'll give them overestimating timing for autonomous vehicles. As we know with Elon Musk time, he's a little bit more focused on aggressive timelines and stuff like that, which is understandable because if you give yourself an aggressive timeline, you're more likely to reach it than if you give yourself, just a typical generic timeline that isn't really aggressive. So I would much rather have Tesla on these aggressive timelines rather than giving them lower expectations and therefore kind of giving you that mental barrier that would cause you to, let's say, not be as efficient or to maybe not work and grind as hard as they have been. So I personally like the aggressive time frames and stuff like that with Elon Musk. Yes, it's just something that you have to get used to, especially if you're an analyst or an investor. You have to kind of take the timelines with a grain of salt, but also realize that it is likely to occur sometime near that time range that has been announced. And then, of course, another issue that it mentions right here is underestimating legacy automakers. And I've seen videos with Solving the Money Problem talking about this as well, where he basically just laughs off the statement of the competition is coming. We've been hearing this for years and years and years. And even at this point, if we were to underestimate what legacy automakers are doing, the fact here stands is that even with current EVs that companies are producing right now in America, they are still not able to meet the metrics of the Model S that Tesla produced way back in 2012. And I believe that Tesla has improved on the Model S by like 40% since then. So that's kind of like my argument against the competition is coming, because it's something that we have been hearing for so many years now. Even the Volkswagen CEO just mentioned that they are way behind on the timelines in comparison to Tesla. And they even internally named their own plan the Tesla catch-up plan because they realize how far behind they are. And honestly, I think that Volkswagen is one of the few companies that is being honest right now, one of the few automakers that is pretty much admitting the facts, and that is everyone else is so far behind Tesla that it's ridiculous. It's like Nokia compared to the iPhone way back in the day, in my opinion. And the longer that legacy automakers sit here and deny this fact, that just gives Tesla even more time to catch a larger lead. And at this point, automakers should truly fear Tesla even catching just a tiny bit more of a lead than it's already at right now, because Tesla has so much more data when it comes to full self-driving autonomy. So in my opinion, I think it would be probably unlikely to underestimate legacy automakers unless someone associated with Amazon or Google or a large company just comes out of nowhere and reveals this big secret project that they had going on all along that people just weren't aware of. Because at this point, Tesla has so much more full self-driving data than any other company that exists right now, especially with real-world driving data. That's what really matters. Simulated data is just not the same. And then also just furthering on with this article, it says Jonas also tweaked higher his bear case estimate to 375 from 281. Our forecasts give Tesla credit for continuing to attract world's best talent at the industry's lowest price cost of capital, he said. Shares of Tesla have gained 265% this year, compared with gains under 1% for the S&P 500 index, and contrasting with a loss of around 7% for the Dow Jones Industrial Average. And then it also mentions that Tesla recently reported a surprise second quarter profit just last week. So what I'm noticing with a lot of these analysts is that they just don't want to look farther into the future. And I believe that a lot of these analysts are just simply focused on the short term too often when it comes to great innovators like Tesla that are really just disrupting a whole sector of the economy. So I think the crucial mistake that a lot of these analysts are making is that they're thinking about Tesla either where it's at currently or where it could be at within 1 year, instead of looking at where Tesla could be in, let's say, 4 to 10 years or just a little bit farther down the road. And honestly, if you just look at the metrics and everything that's going on right now, and also take a look at Tesla's previous first part of their plan before they they released the part 2, they have already accomplished everything that they said they would do in the first part of the plan. Now they are moving to another part of the plan. So if we're just looking at who kept their word and what actually happened, Tesla kept their word on the first part of the plan. They accomplished what they said they were going to do. And in my opinion, when a company gains credibility like that, I believe that at least with Tesla, you would think people would start to take their word a little bit more serious and maybe trust them on that. So just given everything going on so far, I think you have to take a little bit farther look into the future compared to just seeing where Tesla could be in the next year or maybe even 2 years. I think what really matters with Tesla is what happens within the next 5 to 10 years, and especially by 2030, that is really the milestone where you can say who has been successful and who hasn't. But so far, just seeing the progress that we are at, Tesla has pretty much no competition whatsoever except for maybe XPeng and then some companies funded by Amazon and Google. But in terms of serious competition, Tesla is truly the only one, at least in America, that is getting a lot of the market share right now and are developing their products even further and improving them, especially with these over-the-air software updates and stuff like that, that are really just iconic factors of Tesla that you cannot get from another vehicle right now, at least. So as always, I hope you all enjoyed this video. If you did, please make sure to smash that like button. And I just wanted to provide my thoughts on Tesla stock and the future of this company, in my opinion. I'm like the type of person that is more in the boat with Kathy Wood and Tasha Keeney from ARK Invest. I think they're one of the few reputable analysts out there right now that are actually looking farther into the future. They're more of like a long-term investment firm. And they're people that are focusing on the new factors of investing, what will really matter in the next 40 years, and that is disruptive innovation and new technology. And I think that a lot of the investors, and especially a lot of the older investors, are focused on these older companies that, yes, they still have potential in the future, but they don't have as much potential as Tesla does. And I think one of the major reasons for that is because a lot of the older individuals don't have as high of a risk tolerance as people that are young like me. Like, I'm 22 years old, so I can afford to risk a little bit because there's always going to be some more time for me to recover and regain some of my money in the future, given that I will likely live, 40 to 60 years. So I would be as bold to say as I think a lot of these older investors don't like Tesla because they don't view themselves as having enough time in their lifetime to hold Tesla for the long term and see all of these gains that we are predicting to happen in the future for Tesla investors. So anyways, I hope you all enjoyed this video. As always, if you would like to begin investing, feel free to use my referral link in the description to Robinhood and Webull. If you sign up with that link, then you'll get some free stocks. But I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.